Welcome to the Real Estate Guys radio program. I'm your host, Robert Helms. How do you keep track of everything that matters in real estate while opening your mind to other investments? Well, today we're in Las Vegas, Nevada at the MoneyShow Investment Master Symposium, and you're going to find out on the Real Estate Guys radio program. All aboard! Registration is open for the Real Estate Guys 22nd Annual Investor Summit. Imagine spending more than a week with like-minded investors, world-class educators, and real-world professionals. Returning in 2024 is the editor of the Gold newsletter, Brian London, real estate developer Beth Clifford, and the rebel capitalist George Gammon. Back with us in 2024, sales legend and best-selling author Tom Hopkins. And joining us live and in person for his 12th Investor Summit, Ken McElroy. Plus 2 brand new faculty members we can't even mention yet, and a lot more. It all begins June 13th in Fort Lauderdale, Florida. Visit investorsummitatc.com to get all the details and reserve your spot. This transformational week is like no conference you've ever attended. Go to investorsummitatc.com and make plans to spend a week with the Real Estate Guys, Ken McElroy, Tom Hopkins, and an all-star faculty on the 22nd Annual Investor Summit at Sea. Welcome to the Real Estate Guys radio show. I'm your host, Robert Helms. Russell Gray is on assignment this week, but I'm in Las Vegas, Nevada at the Investment Master Symposium put on by the Money Show. And while I'm here to present real estate as a safe haven investment, I'm also here to learn. There's all kinds of investors here, and the topics aren't just about real estate. In fact, they center more around the markets and particularly alternative investments. Russ and I have been coming to Money Show events for many, many years. And after the pandemic shut down, they were kind enough to invite me to participate in many of their virtual events. And we still do that. But this is one of the first live Money Show events where we're getting a chance to get face-to-face. I've had a chance already to meet Charles Payne. He had an amazing presentation. And in addition to my breakout session, we did a main stage panel on real estate investment. So today, I'm going to bring you exclusive interviews with my other 2 panelists and the moderator. I think you'll find it interesting on the Real Estate Guys radio program.
Hello, I'm Brian Tracy, and I'm here today with Robert Helms. He's one of the real estate guys, and he always has wonderful ideas to share with you that can improve your life, improve your income, and help you to achieve more than you ever thought possible.
Welcome back to the Real Estate Guys radio program, now in our 27th year of broadcast. We're talking about all things economic, having been at the Investor Masters Symposium for the Money Show. And at that event, I had the opportunity to meet our guest who we also sat on a panel together. Let's welcome to the Real Estate Guys radio program, Dr. Selma Hepp. Hi, Selma.
Hi, Robert. Thank you so much for having me.
Yes, well, it's great to have you on the show. You are the chief economist at CoreLogic, so you pay attention to real estate, among other things, and was really impressed with the presentation you gave at the event, and getting to sit on that panel was fun as well. But these are challenging times, right? I mean, interest rates are crazy, and they've risen faster than ever, and that's affecting the market, and yet, not every market is reacting the same. Single family is certainly different than some of the commercial properties that we're seeing, but give us your view. You're paying attention to this stuff. Where do you think we are, and what do you think comes next?
I think where we are right now is that we're sitting on the bottom, waiting to crawl our way out. There's different ways that I look at it. One is that we're in a quagmire because we're just sort of stuck. But really the issue at the moment is that mortgage rates, instead of gradually declining as we thought was going to happen earlier this year, they've actually been going up. Right. And so most recently they've hit 8%. I mean, I think that was quite a bit of a shock for the potential buyers. I mean, it's just overall a shock because we haven't been in this high rate of environment in a long time. So basically, the year has been determined in large part by what's happening with rates, but then also with inventory. So while, mortgage rates have come down at some point in in the beginning of the year, following that first peak, we didn't see as many sellers come in as we saw buyers come in. So while the transactions are really slow, we do see a lot of pressure on home prices again. So today, for example, there was a Case-Shiller release for August data, and I compare that to CoreLogic HPI, and basically, from the bottom of this year, where January, February, to where we are today, home prices are up some 5%, and this is in less of a year period. So we've had quite a bit of a home price appreciation in light of all of these other things that are impacting housing markets. So it's been an interesting trend to observe.
Well, for sure. And, there's the issue that prices are inching up, and that always feels good if you own a home. But with interest rates the way they are, if I were to sell my home and try to move to another home, well, there's a challenge because of the inventory squeeze and because of the interest rates. So it seems to me like in most areas, the people that are selling because they have to. They got a job transfer, or they've had a family change, or for some reason they're relocating and they're selling, and maybe their home is up in value depending on how long ago they got it. But are you seeing that folks are making lateral moves, or are people selling homes and then jumping in to be tenants somewhere?
Well, it's interesting because we all think of existing homeowners as all having mortgages, but actually 40% of homeowners out there own the home free and clear, meaning that the mortgage rate environment is not impacting their selling decision. It may be impacting their buying decision, but not their selling decision. So basically what that means is that we've seen folks that do sell, for one, yes, they either have to sell, they sell because they have to sell, or they're just making that lifestyle change. They're retiring, they're moving closer to kids, or moving for a job, or moving to more affordable environment. Well, I'm not being able to observe those jumps from homeownership into rentership per se. I think what we are seeing is that people that are selling because they have a lot of equity, like you said, or they own free and clear, and are moving to more affordable locations, are moving to places that are warm in the winter, or have some tax advantages, or just moving to be closer to the family. So I think that's at this point what it's really the remaining activity in the market.
Yeah, and that makes sense. I think from our perspective, most of our listeners are real estate investors, so they may own their home, but moreover, they're looking at real estate as an investment, and they're less sensitive to interest rates. You wouldn't think so. If you buy more property, I think you'd be more sensitive. But for a real estate investor, the loan rate is interesting, but what's important is the overall return on investment. So we're seeing investors that are still buying property, but they're buying in places where the rent has gone up, where the rent income is enough to make sense out of those mortgage payments.
Yeah, so absolutely. So one data point we do track is investor activity. And so we've seen exactly that. So first of all, we've seen investor overall activity remain elevated in light of a higher mortgage rate, despite the higher mortgage rates. But the shift has been from institutional investors to smaller investors. So now we see more participation, more smaller investor relative, to each other. The other thing that we're seeing is that investors, the smaller investors, they're buying in markets that have up until this point seen a lot of rent growth. So while we were trying to determine earlier in the pandemic if investors drive rent growth or rent growth drives investor activity, we settled on the latter because we saw that in areas that seen more rent appreciation, that's where investors were, following. But then now thinking where that is going to take us, I look at where currently small investors are investing, and it's sort of contrary to what one would expect, meaning that in markets that they're investing in right now are like California markets, are markets that are actually very much undersupplied and have been undersupplied, meaning that they know that home price appreciation and rent appreciation is pretty guaranteed going, continue to grow, because there's that inventory challenge.
Well, that's true for sure. And that kind of segues into new housing starts. And when you have builders look at the environment, they're certainly thinking about the environment for lending. And are there buyers who are willing to make those purchases? But what are you seeing when it comes to new permits and new housing starts?
Yes. So because of rising mortgage rates, we've definitely seen shift from existing market towards new markets. Yeah. So now both home sales activity and inventory are faring more in favor of new housing because first, it's available. And second of all, because mortgage rates have increased so much and builders have sort of built in some level of margins that they've been able to come in and provide incentives mostly in form of mortgage rate buy downs, and in that way incentivize home buying activity. So we've seen inventories and actually home sales activity, new home sales as a share of total sales were about 15%, but now it's as much as 30% because there is no existing inventory. Only thing that there is new inventory to be sold. So that's and the activity is in markets where you do have new home sales available for sale. And that's not the case everywhere in the country. When you think about new home construction, it's really mostly happening in South and Southeast, a couple markets on the West side with, Phoenix, Las Vegas, but it's mostly Texas, it's mostly Florida, Carolinas, Tennessee. So it's not uniformly available, this new inventory. So it in that way, it's impacting home sales activity in different markets as well.
Now, a subset of the home builder marketplace, and we talked a little bit about this on the panel, is the build to rent or build for rent group. People that are looking to buy land and develop it and build townhouses or condominiums or houses, not to sell individually as much as to hold and rent. How do you think that impacts the market?
Yeah, so I think that's also not the case. It depends on the market. Like in a market where there is a lot of build to rent and it's being built to rent, not built to sold, it may be to some extent limiting homeownership opportunities for those people that can afford. But I think that the idea is for those communities to offer what single family home offers without having to actually buy the home. So people can test out the market in some way. And it's mostly happening in these really high population growth, high job growth markets, large metros, Atlanta, Dallas, South and Southeast. So I think it is serving a purpose. It's serving a purpose because it's there for people to prepare themselves for home ownership if that's in fact what they want.
Well, and on the other side, one of the challenges investors have via their tenants, the real challenges tenants face today is the cost of everything. So it's not just that, rent's up, but gas is up and food is up. And so we often talk about how a renter will make a different decision about moving than a homeowner. If, say, I have a variable mortgage and I own my home and my payment goes up $200 a month, I might not be happy, but I'm not going to move over it. Mm-hmm. Whereas a tenant, if their rent goes up $50 and the gas bill goes up $60 and their grocery bill goes up $100, they might consider moving. How does that kind of change factor in?
So we've seen, it's interesting, migration patterns sort of reflect that very, very clearly. So basically in markets that have seen a lot of appreciation, rent appreciation, in many markets, rent and home price appreciation has mirrored each other, Yeah. Home prices gone up, rents have gone up. So it's very similar. So what we see is in very high appreciating markets, once when you get to this point of huge lack of affordability, people will start moving out of those areas to more affordable adjacent areas. And to give you an example, Miami is like a poster child for incredible amount of rent growth. We have a single family rent index at CoreLogic, And when we look at cumulative rent appreciation, Miami is like on top with almost 60% increase in rents since the beginning of the pandemic, right? So that's huge. Imagine your rent going up 60%, right?
Wow.
But what that means is that people are now leaving, whatever the areas of high appreciation are and moving wherever they can afford. And that's, close enough, depending if they need to have access to jobs and things like that. So we do definitely see now this spillover of both people and to some extent appreciation to adjacent, more affordable markets. And that's not just within a metro, that's like going into more exurban and even rural metro, micropolitan areas where people are just basically seeking affordability.
So, Selma, I know you pay a lot of attention to the single family market. What have you to say about the commercial markets and what we're seeing there? There's word of, all these loans that are going to be coming due in the next 2 or 3 years and the havoc that might wreak. What are you seeing there?
Well, yeah, it's, I worry about it. I mean, we all worry about it. Just the numbers are astounding. And so you are naturally worried about it. I don't think that we've seen anything significant play out yet. There's been a couple large buildings that made headlines, but as a cohort, as a segment of commercial real estate, I'm thinking more specifically of office in this case, and some multifamily as well, because those are the two that have been most significantly impacted.
Yeah.
We have not seen sort of a consistent default among these type of properties. It's more what's happening is, maybe to some extent they're getting, some, if they're lucky, have enough equity to where they can maybe get some private monies and do some sort of refi that way. Or, sublease, or, even the San Francisco market, which is one market that, sort of, really on a shaky grounds in many ways, because a lot of people are leaving the market.
Yeah.
There's been some headlines of these buildings being bought now by large companies, by big name companies. And, I'm hopeful that this plays out better than we all fear it would.
Well, there is always a demand for real estate, and we talk about the fact that the building can often be more resilient than the business. Business can fold its doors and the building's still standing. So you're right. There are definitely some folks that are seeing the other side of it and saying maybe time to pick up some bargains.
Yes.
Another thing we say is there's not really problem properties as much as there are problem ownerships. Mm-hmm. So whatever the situation is, hopefully there will be a buyer, even in those kinds of extreme situations. Mm-hmm. So we're rounding the corner here at the end of 2023. All kinds of stuff in the news affecting everybody's mind share. But if you could just kind of tell us what you're looking at and maybe expecting to see in 2024. Is we going to see much of the same? Or are we going to continue on this path? I know you don't have a crystal ball as much as it sometimes seems like you do, but what are you watching for 2024?
Yeah, I think for me, really it's mortgage rates. It's things that affect mortgage rates, right? Because for my work, and for our industry, I think that's really now the key driver. And so, so that's basically, I'm trying to see, and like I said, I don't have a crystal ball, and unfortunately, it's so hard sometimes. I get this question asked a lot, what our forecast is for mortgage rates. And I do my best data-based decision making, or, try to use the data.
Yeah.
But it's very unpredictable. But what I think, the way the data so far is telling us it's going to play out is that we will have another, unfortunately, slower year than we would like. I mentioned at the beginning, we're sitting on a bottom, meaning in terms of transaction activity. I don't think that the activity is going to increase considerably next year. In our forecast, we have a small single-digit increase in home sales activity. But nothing to write home about, and then hopefully with mortgage rates coming down in latter part of next year into 2025, we'll see that build up in activity. We have a lot of things in our favor, as a housing market. very positive demographics. We have a lot of pent-up demand, especially for this demographic, first-time home buying population. We have homeowners that are sitting on a lot of cash, and some will be moving, as I mentioned, like baby boomers. We have, in that sense, a very unscattered housing market, given everything that we've been through. And I mean, all of these inflation pressures we've had, like you said, at the end of this, the homeowners are really strong. And that basically shows up in our GDP numbers that came out last week, where the third quarter was double the pace that U.S. potential economic growth is. So that all says that the homeowners are in a good position. We just need a little bit more inventory, a lot more inventory, and we need mortgage rates to come down. So, with those two playing hand in hand, I think we could have a really good market in 2025 and forward.
Well, you make a really good point that I think sometimes people overlook, and that is that the market is always going to change and have nuances, and nobody knows exactly where. We take the best guess when we are looking ahead. If I'm thinking I might want to refi or buy, I want to make my best decision. But, we set the price of the house or the property once, and then we can refinance as many times as it calls for. So if that happens and rates go down, at least for, the residential 1 to 4 properties, they'll be able to refinance those. And we'll just have to look. It always seems that solutions present themselves when there's a problem, like we've got commercial mortgages that are going to be coming due, and there's the worry that no one's going to want to refinance those mortgages. Well, they don't want the buildings either. So there will be, a solution. It may look like what we're used to. So I think it is important to pay attention. Dr. Hepp is the chief economist at CoreLogic. They provide all kinds of cool solutions in the real estate industry and a couple other industries as well. You can find out more information at CoreLogic.com. It's been great reconnecting with you, Selma. Thank you so much for being on the show today.
Thank you, Robert. It was such a pleasure to join you, and I hope to see you soon again at an event or virtually.
Sounds good to me. You're tuned to the Real Estate Guys radio program. More when we come back. I'm your host, Robert Helms.
Real estate investment advice right in your mailbox. Sign up for the free Real Estate Guys newsletter at realestateguysradio.com.
For thousands of years of human history, silver has been recognized as money. Then in 1965, the United States took silver out of the financial system. But did silver stop being money? Smart investors don't think so. And ever since, when there are concerns about the quality of the currency, alert investors seek shelter in silver and gold. As the size and frequency of major financial crises grow, silver is attracting a lot of attention. To help better understand the what, why, and how of silver, watch the free 9-part series, Making Sense of Silver. Everything you always wanted to know about silver but didn't know to ask. Featuring 30-year precious metals veteran Dana Samuelson. Send your email requests to silverseries@realestateguysradio.com. Whether you own silver now or you're wondering if it's too late, email silverseries@realestateguysradio.com. Are you achieving everything you want in life? What if there was a time-tested way for you to get everything you've ever dreamed of? The most successful people in life set goals and keep themselves accountable. But how? The good news is that it's not rocket science. You too can learn the skills and unleash the motivation that will create success in your life. Hi, this is Robert Helms, and I'd like to personally invite you to attend Create Your Future, the 2024 Goals Retreat, January 12th to 14th in Dallas, Texas. This unique weekend event has been called phenomenal, inspirational, and life-changing by the thousands of people that have attended. Hear from some of them and find out more at goalsretreat.com. Get your life back on track, physically, spiritually, and financially. Attend the 2024 Goals Retreat on the second weekend of the new year. Visit goalsretreat.com to learn more and get on the advanced notice list. This is no dress rehearsal. Live the life you were meant to. Visit goalsretreat.com or call 888-489-7723 extension 18. That's goalsretreat.com.
Hey everybody, it's Ken McElroy, and I'm on with the Real Estate Guys, and I'm very excited to be a guest and a speaker at the Investor Summit coming up. If you haven't signed up, be sure to do so.
Welcome back to the Real Estate Guys radio program. Thanks for tuning into the show. Hey, if you lack clarity and focus, then make plans to join us for the 2024 Goals Retreat. It happens the second weekend of the new year in Dallas, Texas. It's a great way to get centered and chart your course for an awesome year. Get all the details at goalsretreat.com. That's goalsretreat.com. I'm here in Las Vegas, Nevada at the MoneyShow Investment Master Symposium. Before we get back to the interviews, it's time to play Real Estate Trivia. Your chance to win a prize by knowing today's Real Estate Trivia question. Just a minute, I'll give you the question, and if you know the answer, you're going to get one of my favorite books. It's called Turning Pro by Steven Pressfield. When you hear the question and think you might know what it is, just send your best guess to trivia@realestateguysradio.com. Trivia@realestateguysradio.com. You'll need to send us your name, the answer to the question, and your physical mailing address. Last week on the program, we had Halloween horror stories, spooky things that happen to real estate investors, and the lessons we can learn. Here was our trivia question. Name the most popular Halloween costume for 2023. Well, maybe it didn't leap into your mind immediately, but I tell you, you're going to say, of course, the most popular Halloween costume this year was Barbie. That's a lot of pink. Here's our real estate trivia question for this week. Which U.S. state holds the record for the greatest number of layers in a layer cake? Yeah, that's a real thing. You probably had a 3-layer cake, a 5-layer cake. Well, there is a record. In which U.S. state did that record take place? If you know or just want to guess, send your best guess to trivia@realestateguysradio.com. Trivia@realestateguysradio.com. Give us your name, your physical mailing address, and the answer to the question. The first person that gets it right gets Turning Pro by Steven Pressfield. That's today's real estate trivia question. We're at the Money Show in Las Vegas, and it's my pleasure to introduce you to an awesome gentleman that I sat on a panel with and then got to go hear his breakout. Let's say hello to seasoned real estate professional Mitch Roschelle. Hey, Mitch.
Nice to see you. Great to be on a panel with you earlier today. And
that was fun.
Look forward to this interview.
Yeah, absolutely. It was a panel on real estate. So we're here at the Money Show where they talk about all things investment, and we have to carve out a little corner of the real estate market. But give us a little about your background. You had a storied history in real estate, and you're doing some really fun stuff today. We'll get to talk about getting rich in a niche. But give us the big picture, Mitch.
So I started my career in real estate completely accidentally. I love when people, I remember when I used to interview people at PwC. I was a partner at PwC, the accounting firm, and I ran the real estate practice there, which I built with a bunch of other guys in the 80s, and I ran it for a big chunk of my career. Retired a few years ago, actually retired in the middle of COVID. But I remember when I used to interview kids for jobs, and I would say, why real estate? It seems like a logical question you'd ask somebody you were interviewing, and they were saying, oh, it's a tangible asset. Oh, like what crap. Any event, real estate sort of found me. I didn't find it, and I just liked the industry. It was like easier to understand, and there's only two ways that wealth can be accumulated throughout history. Literally, if we go back to biblical times, there's only two ways that wealth can be accumulated. One is precious metals, right? And the precious metals basket still exists today, although some people are investing in precious metals, but that basket includes any tradable asset. Anything that you can settle a trade in is what I'll call the precious metals baskets. Currencies, stocks, bonds, etc. Real estate is the other way, or property, land is the other way to accumulate wealth throughout history. And if you think about it, in times of uncertainty, two things happen. One is people who invest in precious metals, invest in trading assets, they tend to rotate to the safer assets in that basket because they're worried about the future. Yep. But the other most important thing that happens, and again, history has proven this fact, that people take money out of trading assets and invest those assets in real estate. And if I were to take a show of hands at any speaking engagement in the last 20 years and say to the audience, are we in more unsettled times today than we were a year ago? The majority of the people would raise their hand, and for a variety of reasons, okay? So that sort of flies in the face of what politicians say, but the fact of the matter is people who are investors always feel uneasy. Like at any point in time, you feel uneasy about something, And when you invest in real estate for reasons that we will unpack and reasons that you've been talking to your listeners for 27 years about, real estate sort of takes some of those other risks that exist in a more volatile trading asset basket away. So the things you have to worry about if you're a real estate investor are a lot less than if you invested in crypto, for example.
Yeah, for sure.
Yeah.
And I think there is the tangible asset part, but a big part of that is that real estate serves a basic human need. We were talking earlier on the panel about where we saw opportunity. Maybe you can speak to some of that.
Yeah, so when I retired from PwC, I did a bunch of different things freelance-wise, and I joined a private equity firm that's based in Florida. I moved to Florida. Like so many other people from New York, I moved to Florida. And I joined a private equity firm called Madison Ventures Plus. And we invest in white space. We invest in the places where not other people are investing. And there's a lot of reasons why somebody may not be investing in a certain sort of niche area. And one of the niche areas that we love is workforce housing. To the point that you just made, people have to live someplace, right? Have to live someplace. So if you are new to the workforce, if your income situation changed, if you were married and got divorced and now we're living independently, any number of things, you lost a spouse who was an earner and you need to, sort of go down the income scale level in terms of where you're living, that is the most underserved part of the real estate space, either for sale or for rent.
Yep.
So we focused on that, and one of the companies, we have 3 companies in that space. The company that's the oldest in our portfolio is one in Los Angeles that's building workforce housing in Los Angeles. And people, by the way, at this conference, I said Los Angeles, and people are like, what, Los Angeles?
Yeah.
I'm like, okay. So there's a law in California that allows you to tear down a single-family home and as of right build up to 8 units of multifamily on that site. That is phenomenal. That is the most pro-development piece of legislation in 50 states in this country. And it's in, of all places, California, where you would think that they would have nothing but regulations that precluded people from building. But they're intelligently in California trying to tackle the housing shortage in a smart way, collaborating with the private sector as opposed to regulating the private sector. And that's white space. No one was focused on it. And we built a company. We have 8 projects underway right now. And we have raised capital to scale that even considerably more. We'll probably have in a couple of years deployed capital in the $200 million range, and that's just in Los Angeles. And we are forming some partnerships to branch out elsewhere and exploring those opportunities outside of the state of California, because the same concept exists in other places. The other thing we did real quickly is we re-engineered the brick-by-brick, stick-by-stick construction process. There's so much waste, there's so much inefficiency when you build brick-by-brick, stick-by-stick. So we actually fabricate the exoskeleton of the house and beyond in a factory. We deliver on trailers everything you need to build that house, all of the exoskeleton and the kit of parts to get that house completed. We can, from land acquisition to certificates of occupancy, can do it in a year. So we can develop, construct, acquire 8 housing units inside of a year. So think about, that would probably take everybody else 2.5 years. If you had zoning issues, forever.
Even more.
So we are able to get those units to people quicker. They need housing in California. So we're considering expanding that to other parts of the country where, while the zoning benefit may not exist, our throughput time to build and construct serves a housing need in perhaps other places. So you can perhaps sense through radio land my enthusiasm, but it's something we're really excited about.
No, it's great. A couple great things about the concept. First of all, the rich in a niche, right? This is an underserved area because people have this preconceived notion that everything's harder to do in California. Everyone's leaving California. If you go to Los Angeles, though, it is very, very populated. And yet we saw California with the ADU issue a few years back say, okay, well, we'll make it easy to add a second, unit above your garage without having a lot of red tape. You still have to have permits and all that. But this is another step further that allows you to meet the need profitably, any kind of speed helps. They need housing now, not 2.5 years from now, so a year from now is better. But the other thing about any of the prefab or manufactured housing is it generally has better tolerances. It's built in a safe, clean environment. You don't have all that shrinkage and issue, and logistics is so much easier. So it's taken two pretty good ideas and coming up with a brilliant solution.
So you mentioned manufactured housing, and I want to touch that because a lot of people who are listening to what I'm saying, so in their mind's eye, they're trying to paint a picture of what I just said. I once was talking to the CFO of Frito-Lay, the potato chip folks.
Yeah.
And he said one of the hardest things about their business is what they do is they manufacture great product, but then when they stick it on trucks, they're shipping air. And it's really, really inefficient to ship air, right? Now, Pringles, if you're a potato chip fan like me, you're not shipping air. That's a tight tube that's filled with no air. But if it's a bag of Frito-Lay, Fritos, there's a lot of air in that bag.
Yeah.
Manufactured housing, when you build the home, cut it in half, and build the entire home off-site, when you stick it on a tractor trailer and you ship it, you're paying a lot of money to ship air. We don't ship air. We take all of those panels, stick them on a flatbed, and then we assemble them on site.
Yep.
So we don't have the inefficiency of cost. We don't have the inefficiency of space when we're shipping air. So it's cost effective. One other thing I'll mention, so the panels we construct are 15 feet high, right? And the width varies, but they're 15 feet high. So we buy from our supplier 15-foot 2x4s, okay? And they're not all 2x4s, but I'm just trying to simplify it. Well, we don't have waste.
A lot less
We're
waste.
not buying 10-footers and another 10-footer, fusing them together. They're 15 feet, right? So there's no waste. I'll say this, and I love sort of painting pictures that people listening, driving in their car can image in their mind. Think of any construction project you've driven by, walked by in your life. There's a dumpster on the site. New construction. There's a dumpster. There shouldn't be a dumpster on a site for new construction.
Right.
And it's filled with building materials, right? Because they're cutting everything on site. That takes time. That costs money, labor time, material time.
You had to ship all the stuff you threw away.
You paid somebody to ship the. So we don't do any of that. So back to the potato chips, we're not going to ship air, okay? We're going to ship a tightly packed container that's got all the kit of parts in it. We're going to a trailer that's got all the panels on it. No air ship. That's a time and money differentiator. That, by the way, oh my God, I just gave our trade secrets to anybody. Anybody could do this. We didn't invent any of this. This is about as low tech as you can get. And I think that's the beauty of it. It's its simplicity.
Hey, one more thing before we get you out of here, and that is that you've decided in your spare time to do some teaching in San Diego, even though you're in Florida. So tell us about that, and even more interestingly, folks today who are wanting to get educated about real estate, where's their mindset at?
Yeah, so what's interesting is I started lecturing when I was still at PwC at University of San Diego's Burnham Moore Center. For my money, literally, it's the best undergraduate and graduate real estate program in the country. And there's a very simple why. It's practical. It's not a bunch of PhD academics, and God bless the PhD academics that we have there. It's co-instructed and it's co-supported by members of the San Diego and Southern Orange County real estate community. Real people who've done real things in the industry that are engaged with the students all the time. And I'm one of those folks. I'm visiting research fellow there. I do research projects that engage the students. So we're going to do research on something that kids are going to help. We find job opportunities for the kids who go through the program. But the mentorship, those kids in that program have one-on-one mentorship opportunities. So what I do is because I live in Florida, I come on campus and I guest lecture. I'll push into all the classes that all the professors are teaching. And then the real estate community around that program, I lecture there too, and the students participated in it. Listen, I could do an entire show on what's wrong with higher education. I think the folks at University of San Diego crack the code. Instead of just asking the private sector for money and saying, stay out of our building, just send your checks, they actually engage the private sector in the education and development of the students, and guess who wins? The kids, right?
Love that.
Yeah, so that's that. That's a little commercial for University of San Diego's Burnham Morris Center for Real Estate.
All right.
Yeah.
Well, this is fascinating stuff. Hey, you've been in real estate a long time. If you have someone listening who's, maybe getting started, we've got a lot of young folks who listen to our show. What's some of that sage wisdom, words of advice you have for folks getting started today?
I think investors try to compare real estate to other asset classes and try to figure out how to bridge that gap. I don't want to spend the time we don't have left trying to do the compare and contrast. But when you invest in stocks and bonds and currencies and crypto, it's all about market timing in many cases, right? Buy low, sell high. In real estate, you can't market time real estate. It's a really, really chunky capital intensive asset.
Yeah.
So when you start trying to assemble the capital to when you deploy the capital, the market can go up, the market can go down. If you want to invest in real estate, do it for the long haul. Don't do it as buying houses, fixing them up, flipping them sounds really good. It's economic musical chairs, because when the music stops, you may be long 3 houses and can't sell them. If you think about real estate, I said it was the one of 2 ways you can accumulate wealth on this planet, okay? It's been around that long. If you don't have a long-term horizon for real estate investing, don't do it. Just don't. Because you can't decide when I'm going to get in and when I'm going to get out. The market's going to tell you that.
Well said. Well, we appreciate the wisdom and sharing your time today. Thanks for being with us.
That was a blast.
There's Mitch, Roschelle. We're tuned to the Real Estate Guys radio program here at The Money Show. More when we come back. I'm your host, Robert Helms.
Need help with your real estate investment portfolio? Check out the resources page at realestateguysradio.com.
As I speak, inflation is robbing you at a rate north of 10%. Last year, the number 1 zip code that Mid-South homebuyers offered income property to Real Estate Guys listeners in appreciated by 21%. To harness that spread and protect and grow your wealth in the current economic storm, you need the 2 decades of experience in renovation and management that Mid-South homebuyers brings to their investors. Every home Mid-South offers you will have brand new components, a new 30-year roof, and a high-quality renter, all in a price range under $150,000. Their empathetic property managers will use your ROI as their North Star, while the lack of repairs on their totally renovated properties contributes to their almost 4-year average renter stay and 99% occupancy rate. Learn about their lifetime occupancy guarantee and total 1-year maintenance guarantee by emailing midsouth@realestateguysradio.com. That's midsouth@realestateguysradio.com. You'll be glad you did.
If you love real estate and have always wanted to own your own business, listen up. The Real Estate Guys and their panel of experts want to teach you how to go full-time fast in the real estate syndication business. These next few years may go down in history as one of the best times ever to acquire investment real estate. There are deals everywhere if you know where to look and how to assemble the resources. The Secrets of Successful Syndication seminar will show you how to make big money doing big deals from a team of experts that have syndicated projects totaling more than $1 billion. Don't wait for someone to give you a raise or create a job for you. Attend the Secrets of Successful Syndication and learn how to build a team, raise capital, find deals, and make full-time money in 6 months or less. Go to realestateguysradio.com and click on events. All the big players use syndication as a way to diversify risk, optimize profits, and earn big money. You can too. Go to realestateguysradio.com and click on events.
Having trouble finding deals where the numbers make sense? Invest in an asset class that delivers cash flow to you in good times and bad, and where most of that cash flow is tax-free. I'm Dave Zook. Many of you have heard me speak at Real Estate Guys events or heard me on their podcast. My team is a top 5 ATM operator in the country, and right now accredited investors can make cash flow returns well into the double digits and get huge tax deductions. For your free report on this lucrative asset class, email atm@realestateguysradio.com.
Hi, this is Garrett Sutton, Rich Dad's advisor. Remember, equity equity happens. And you're listening to The Real Estate Guys.
Welcome back to the Real Estate Guys radio program. Thanks for tuning into the show. It's been an amazing week here in Las Vegas at the Money Show. And let's say hello to the editor-in-chief of the Money Show, Mr. Mike Larson. Hey, Mike.
Hey, how you doing, Robert? Glad to be here.
Great to see you. Great to be at the event. Thanks for inviting me.
You got it.
We had an incredible array of things covered. So here we are, having talked about stocks and bonds and real estate and the economy and even a little politics. What were your big takeaways from the conference?
Sure. What we're trying to do with these symposium events is cover a little bit of everything. We have a high net worth investor audience. We have some traders in attendance. So we're looking to cover trading tactics and tools. We're looking to cover economics. We're looking to cover, as you said, stocks, real estate, alternatives, and so on. If I had to describe the kind of consensus of the conversation so far, you've got a wide range. You've got some that are on the optimistic end of the spectrum, some that are a little more pessimistic. But I guess that's what you want. It's a marketplace of ideas. People take a little bit away from an event like this that they want. But I think overall, there's a consensus that we face some economic challenges. The Fed is probably close to, if not all the way at the end of its rate hiking cycle. And in general, there's some excesses. There's potentially some seasonal weakness we could face. But overall, I think longer term, people are looking forward to a better finish to the year and a better 2024.
There's a lot of people pointing to last year and all the crazy changes and all that. Of course, after the pandemic, everything is different. But here, it was a lot more optimistic tone than I might have expected.
Yeah, it's interesting. We had some of our best speakers get together for a dinner and did some informal polling. Okay, where do you think the S&P is going to go? Who do you think is going to win the election? It was a pretty broad-based poll. But overall, again, when you look at the consensus, it was the Fed's pretty close to being done. We might see a seasonal pullback, but we're looking for a strong finish. Generally speaking, the recession argument or the recession conclusion was, yes, there might be some weakness. It's possible we have a mild recession in early 2024, but nothing on the order of what you saw in 07, 08, or even going back to the dot-com crisis.
Now, you moderated several of the panels, and of course, this morning we did the real estate panel, which was great to talk about real estate, and enthusiastic audience, actually. I got a lot of good conversations about that. But obviously, interest rates, the elephant in the room. You had the chief economist for CoreLogic here. She was phenomenal. How much do you think that really does impact the overall investment market when we see interest rates at the highest they've been in, more than a decade?
Sure. I think we've seen a lot of the impact in terms of what it was going to have on the stock market, right? If you look at 2022, what was the major reason the market was struggling? Because the Fed was hiking more aggressively than it has since the early 1980s. Because inflation in June hit a peak over 9% year over year, which is also the highest that we've had since the early 1980s. Yep. So I think the market priced in a lot of interest rate fear and interest rate consequences last year. Now, part of the reason there's a better tone is, again, people can see the light at the end of the tunnel. Yes, the Fed may still have a little tiny bit more, maybe an arrow or two in its quiver, so to speak. But ultimately, after that, they're going to hopefully move to the sidelines. And eventually, as inflation does come down, maybe even get a cut or two next year. So that's the shift in tone. You know that Wall Street and investors always look ahead. They're looking at what's going to happen 6, 9, 12 months down the road. So I think that's why there's some optimism that things were bad last year. It's obvious why they were bad, but we can see that little bit of that light at the end of the tunnel.
Let's talk about some of the sectors where there is some optimism. A few months back, you were pretty bullish on technology. That's turned out to be a good call. What do you think about just some of the industries that make sense right now to follow?
Sure. Some of the expert speakers we had here and at previous Money Show events late last year and earlier this year, the Mark Mahaney's of the world, the Tom Lees, they were very bullish on technology, and that sort of influenced some of my own thinking, and it worked out great. So kudos to them. I think what we're seeing now and what we've seen in the last couple of months that makes me even optimistic about the rest of the year is broadening out. We started the year with sort of that magnificent seven, the FANG stocks, whatever you want to call them, that were pretty much driving the entire market, and a lot of the rest of the market was being left behind. Yeah. But we've seen that change in the last 3 or 4 months. We're seeing small caps catch up. We're seeing, after the financial turmoil we had in banks back in the first quarter, we're seeing some brave investors step in and buy bank stocks. So as the market broadens out, or if the market continues to broaden out, that to me is a good sign, because you can't have have a market that's just run by one sector. You have to see people taking shots and looking for opportunities elsewhere. So that's what we're seeing. A little bit of money into financials, some more optimism about industrials, those kinds of sectors that are a little more economically sensitive. People are looking, again, down into next year and saying this recession threat is probably going to fade. The Fed's going to move to the sidelines. That's good for the economy overall, longer term.
I think I attended my first Money Show event more than a decade ago, one of the big events in Orlando, and then I came to an event here. You do a variety of events. We'll tell folks how they can find out more. This one specifically kind of aimed at alternative investments. So when the traditional investing world thinks of alternatives, what it's maybe anything outside the Dow, but there was a lot of different representation here. You had, startup companies, you had folks that are managing funds, you had folks doing private placements. So it is a lot to learn in a short period of time.
Yeah, it absolutely is. I mean, again, these days most people are well educated on buying, trading, investing in stocks, but when you get into that private world, alternatives in real estate, alternatives in oil and gas, direct ownership, or through some of the private placements, some of these other assets that are less liquid but offer higher returns and so on, and also offer tax advantages. So that's what we're trying to bring together in the events like this. Focus on some of the things you can do outside of your traditional brokerage account to look for better income, to look for better tax management, and so on. And yes, you're right. It's been real estate, it's been oil and gas, but also some credit and debt market opportunities, things cannabis, for example, and also cybersecurity. So there are this sort of I guess you could call it again sort of a hodgepodge or a marketplace of ideas that offers something for everybody.
Well, what was great about this event is you had the main stage presentations and panels and things where everyone heard the same message, and then offered several breakout sessions where the attendee could pick and choose what they were the most interested in, and that's always a great format. It's a little bit smaller, a little more intimate, had some great breakout sessions. I think everyone I went to, I learned something fabulous.
Yeah, absolutely. I mean, again, people may have been interested, or they may have heavily invested in oil and gas already, but maybe they're considering real estate, or maybe they want to learn more about precious metals to diversify. Or you may just, sort of the serendipity of something like this is you may walk by a booth and say, that's interesting. I never thought about that. Let me hear a 5 or 10 minute pitch to understand better what the opportunity is. So that's really what we're trying to create here. As you said, we've already gotten some good feedback, and we're pretty optimistic that this is going to be a great show.
Well, 40 years so far, the Money Show, which is awesome. Tell us about what some of the events coming up are, maybe later this year and even next year.
Sure. Well, you've been coming to Money Show events for a number of years. We have moved towards doing now the symposium-style events, which this is, as well as the general audience shows, which are your traditional Money Show / Traders Expo. So we've got a mix of those over the next 6 to 12 months. We'll be in Orlando for a traditional Money Show Traders Expo, and then we're going to be doing another symposium-style event, actually for the first time in our own backyard in Sarasota in early December. So I know it's going to be real hard to twist people's arms and get them to move, come from New York or Minnesota or wherever to Florida in December, but we're going to try our best.
And then, of course, since COVID, we first had an opportunity to work with you guys on some virtual events, which make it super easy for people. Great engagement on those, great variety of topics, but you've kept that up. You continue to have a pretty good choice of virtual events as well.
Yeah, absolutely. We're trying to keep people educated and informed in between our in-person conferences, so we do the virtual expos pretty much every month. Some are, again, more of a general audience, publicly traded stock focus. Some are a little more alternatives and so on. But the idea is, yes, give people something in between the conferences, give people who may not want to make the travel, the expenditures and so on, something to be able to learn from those experts. And we're doing a lot more on YouTube, podcasting, social media, and so on to, again, just get our message out there, get people information in between events, and make sure, again, we stay connected and they stay informed.
If you'd like to learn more about what they do at the Money Show and the variety of things, including some cruises, just go to moneyshow.com and you can learn all about that. Mike, great event. Thanks for having me, and thanks for being on the show today.
Awesome. Thanks for being here, Robert.
That's Mike Larson, editor-in-chief for the Money Show. They do lots of events, live events, virtual events. You can find out all the details at moneyshow.com. Big thanks to Mike and the entire team for inviting me and making me feel so welcome here in Las Vegas. Hey, if you haven't heard, we've just announced some faculty members for our 22nd annual Investor Summit at Sea. We're getting back on a cruise ship, and you can join us, along with our friends Kenny McElroy, George Gammon, Brian London of the Gold Newsletter and the New Orleans Investment Conference, precious metals expert Dana Samuelson, all-time sales legend and author Tommy Hopkins coming back with us, and live and in person, our good friend Peter Schiff. If you want to join us on the Investors Summit, just send an email to summit@realestateguysradio.com, summit@realestateguysradio.com. Next week, we have a little bit of breaking news, something that's going to concern all real estate investors and business owners. Be sure to listen in. Until then, goodbye from Las Vegas. Go out and make some equity happen.
This episode of the Real Estate Guys radio show is brought to you by Paradigm Life. Powerful cash management strategies using life insurance. Learn more at beyourbank.com. Mid-South Home Buyers. Low-cost, turnkey cash flow properties in Memphis, Tennessee. Corporate Direct. Asset protection strategies for real estate investors from attorney and rich dad advisor Garrett Sutton. Find these and other great companies under the Resources tab at realestateguysradio.com. To learn how you can expose your product or service to the Real Estate Guys audience, call 888-489-7723 extension 4. That's 888-489-7723 extension 4. Or use the feedback page at realestateguysradio.com. Thanks for listening, and we'll see you next week right here on the Real Estate Guys radio show.